Welcome to another S&P 500 analysis. Today is January 22nd, 2022. Ever since January 4th, after the S&P 500 made a new all-time high, that's been on a downtrend. And last week, the S&P 500 had reached a critical level. In this S&P 500 stock market analysis video, we'll look at the implication of this critical level. Stay tuned. Last week, the S&P 500 lost almost 265 points or 5.68%. It had a range of close to 237 points. As you can see from this weekly chart here of the S&P 500, ever since the first week of January of this year, it put in a new all-time high and has been one time framing down. Remember the previous video, we're talking about this level here, and since it is still inside of this channel, we're still looking at the weekly basis. The trend, it was still considered to be up. And now we are seeing the S&P 500 coming down to this lower boundary of this price channel that we've been watching for quite a while now. And remember, we were saying that we will not consider any sort of a trend change until it breaks this price channel. And looking at last week's price action, it appeared to be breaking down from this price channel. So we're going to take a closer look at this price level here and the price action in a little bit more detail and see what are the implications of this level later on in this video. Let's take a look at the sentiment chart here, the VIX and also the put call ratio. Remember, we're basically watching this level here, this pivot high, this 45.45 level. And essentially, it has been pretty much in this balance area here for quite a while now for the S&P 500. Remember, it kind of looked above and fell and came down and retraced all the way back to the other side of this balance area. And on Thursday, actually broke this balance area and broke down from this level here. So right now, we're basically looking at the possibility of will it come back in and move back up, or will it continue to come down and possibly come down to near this 4,300 level. But before we take a look at that a little bit more in detail and also wrap up some of the possible scenario, let's take a look at the sentiment and also the internal. See that the VIX, actually the VIX got close to 30 last Friday, and it closed out at 28.85, and it is well within this 20-30 zone. So definitely the market participants are getting quite fearful now. And also looking at the put call ratio, it's been quite a while that the put call ratio is actually above 1. It closed on Friday at 1.05. So once again, the market participants are buying hedges and also buying puts. And looking at the up-down volume ratio of the New York Stock Exchange last Friday, we see it's almost close to 8-1 in favor of the downside, the down volume here on Friday. And also the declining issue outnumbered the advancing issue 2,086, more declining issue than advancing issue on Friday. So definitely there were broad market downside selling on Friday. In addition to the negative AD, we also see a tremendous explosion on the new 52-week low on Friday. You can see there were 533 new 52-week low versus only 7 new 52-week high. And the new 52-week low outnumbered the new 52-week high by 526, and we haven't seen this level for quite a while now. And looking at the New York Stock Exchange AD line, the cumulative AD, we finally see the S&P 500 got back in sync. What I mean by that is that these pivot low got taken out by the S&P 500. So now it is basically making a lower low along with the advanced decline, the cumulative advanced decline. So that is pretty much in sync. Remember before, we were essentially looking at this negative divergence here. And right now, that negative divergence essentially has been resolved. Now, let's take a look at the Nasdaq market and also notice the Nasdaq 100. Also seeing this Nasdaq 100 been balancing in this area here. And ever since the end of December, it has broken down this balance area and start making its way down. So right now it's getting close to this level here, somewhere around 14,400. And you can see last week on Friday, the up-down volume ratio, it was 5.5 to 1 in favor of the down volume. And the advanced decline, there were 3,080 more declining stock than advancing stock on Friday. And for the new high, new low in the Nasdaq market, notice that there were only 19 new 52-week high versus 1,323 new 52-week low. That is quite an explosion on the new 52-week low. So the net difference is 1,304 more new 52-week low than 52-week high. And on the Nasdaq cumulative AD line, also we see this negative divergence from the between the Nasdaq 100 and the Nasdaq AD line. Cumulative AD line has been resolved. Remember, we're basically looking at this particular negative divergence here, right? Because the AD is pretty much in a declining slope, while the Nasdaq 100 is actually making, continue to make high and also higher low. So right now it's actually finally broken down here, dip below this pivot low, and the AD line also putting in a new low here. All right, let's take a look at the daily S&P 500 price action. Remember last week, the previous video, we were talking about the potential upside of getting a bounce off of this 618 and possibly break this trend line and get back up above this pivot level somewhere around 4750. Well, that did not happen. And the downside scenario was that it break this 618 and also this trend line. Then it come down to this 50% level, and then we get a little bit of a back test on the 618, then proceed down to fill these gap, this gap and this gap here. And then we see that might get a bounce off of this trend line. Well, it did come down and fill these two gaps, but it did not get a bounce off of this trend line. Instead, it is moving down to fill this gap. Try to fill this gap now. So next week, we're going to be paying attention to this gap fill to see would it actually come down and fill this gap. Also, the other thing is right now, the market basically have corrected 8.77% from its high up here. And if it breaks this, fill this gap and come down to this pivot low, then we're essentially entering a correction territory. Now, the definition of correction is 10% or more. So if it break down and come down to this pivot low, and if it continue to move down here, remember we were talking about the 4,300 level, right? One of the critical level to keep an eye on. Well, actually, we are looking at this pivot low here. So if it gets below this 4278.94 or close to that, so essentially getting below the 4,300 level, then we are actually entering the correction, territory. And when it get down to this low here, we essentially are looking at a 11.2% correction, and that could lead down to this level here, which would be somewhere around this 4050 level, and that would take us down to about 15.7%. So if it get down to this level here, then that will be vitally important for this thing to hold. Otherwise, it will get down to the 20% level, and then that will be in a bear market. But right now, we're essentially still looking at the possibility of, coming down to this 10%, or maybe just fill this gap and get a bounce back up to this trend line here, and maybe we'll get a little bit of back test and push us back down and try to test this 4,300 level. So that is one possibility. The other possibility is that it actually come back in and get above this trend line and move back up. Then we basically back on watch at this 45.45 level. Okay, so those are the scenarios that we need to keep an eye on. And the critical level is 4,300. Dip below 4,300 level, and we have to pay attention to these pivot low and also the possibility of this low here down here at the 4050 area. And looking at the daily price action of the Nasdaq 100, as you can see last week, we're essentially looking for the upside scenario of coming back up at this pivot high here and possibly see could it get back above this pivot high above the 16,000 level. As you can see, it did not do that, and also we're looking for this downside move and possibly come down to fill this gap. As you can see that it broke down this 38.2% on this retracement and came down and filled this gap plus more. So right now, since the from the all-time high, the Nasdaq 100 have given back close to 14%. If it come down to this level here, this pivot low at 14,385, then that would be a little bit over 14%. And if it come down to this pivot high here at this level, somewhere around 14,000, then that would be 16%. It lost 16% from its high. And if it come down here, then essentially the Nasdaq 100 dip below this critical level of 13,000, then it will actually enter into the bear market territory, as by definition, anything greater than 20%, we are basically the index is in a bear market. So for next week, the scenario that we'll keep an eye on would be to see, would it be able to hold this level here at 14,385 to see would it get a bounce back up to this level at 15,345. And if it doesn't, and it continue to come down, then we essentially need to see would it be able to hold this 14,000 level. If it breaks below 14,000 level, then look out below. Okay, got to be very careful on the Nasdaq 100 because we're also getting some FANG stock earning next week. So that's going to move the price on the Nasdaq as well. And depending on what the FOMC announcement is on Wednesday, then that will be also throw some volatility into the mix here. And here looking at the Russell 2000, remember we're saying that if it could not bounce back up and take out this 2195 and breaks below this 2134, then we wouldn't even bother to look at this 2075. We're essentially looking at this range extension retracement down at this 1930, at this 1950 level here, and possibly move down to this 1935. So as you can see right now, it's basically just coming straight down pretty much toward this 1950 level. So we'll keep an eye on this to see what it actually come down to this range extension. Now, if it decide to move back up, then again, we will watch this 2075 for potential resistance here. Okay, and it has to get back up above this 2134, essentially getting back inside of this balance area and see would it be able to work itself back up by getting back above the 2195 level here. So there's more downside on the Russell 2000 to watch, and that would be the 1950. And for the Dow Jones Transportation, we basically was saying that watch this level here at the 15,346. And if we break this level, we're still looking for this gap to fill. So right now, we're essentially looking to see is the Dow Jones Transportation will move its way down, dip below this 15,000 level and fill this gap, because this gap been waiting to get filled for quite a while. And if we decide to bounce back up, then we're essentially looking for it to move back to this 15,346 and possibly get back up above this declining trend line here, and also at this 50% retracement if we could get back above the 38.2. So that would be 16,114. So that's the upside scenario. Downside scenarios, look for this gap fill here, and wouldn't be surprised to see it retrace back down to this 13,981, this pivot low here, somewhere around this 14,000 level. And for the Dow Jones Industrial, we did not see a bounce back up from this 35,625 and come up to this pivot high here. Instead, we saw it broken down, and right now it's pretty much sitting at this trend line here, this intermediate channel trend line. So we're going to be keeping an eye to see would it be able to bounce back up and back test this 35,625 or will it continue to break down and move downward, then we basically are looking at this area here, somewhere around this 33,500 area for potential support. Now, just to recap on the New York Stock Exchange Composite Index, remember last week we were talking about this high here. From my experience, I have never seen a market top out with the New York Stock Exchange Composite Index making a new all-time high by itself. So right now, although we are getting a pullback from the composite, it is getting back inside of this this range here. So I wouldn't be surprised to see it come back down to this 16,095 level here, essentially the other side of this balance area. So we'll be watching for continuation on the downside at this level here, or if it could pop back up and get back above this 16,700, then we're going to be watching this pivot high once again, this level here at 16,935 area. 10-year yield last week, it actually moved up to 1.874%, and then backed off and closed the week at 1.747. We're still essentially looking at these two possible cup and handle type of major move, right, up at the 2.45 for this particular small cup and handle. And for this larger cup and handle, we're essentially looking at a 3% on a 100% major move, but at 618, we're basically looking at this 2.54. So we probably be targeting this somewhere around this 2.5% in the near term from this cup and handles. Now, looking at the US dollar, we see the US dollar is still chopping around near this 95.7. So we'll see would it be able to get back up above this range and make itself back up toward this 97.79, or would it continue to break down and move back down and back test this, retest this 94 level here. As you can see, last week, crude oil continued to make its way toward this $90 level. So we'll continue to watch for crude oil to try to get up to this $90 level at 90.43. And for silver, silver had a strong week last week. It came up to this 24.71. So right now, we're going to see would it be able to break above this level and move toward this 26.67, or will it come back down and pull back a little bit and possibly, retest this level somewhere around this 23.30 area and then get another push up to break this 24.71. Gold is also making a move. It seems like it is trying to move up to, break out of this this downward trend here. Let me get this trend line here. Essentially, if we're looking for this thing to break above this 1846, get into this zone here, this high volume node, and then we'd be watching for this 1923 area. That would be the next level or the next target level to watch. So it's bouncing around at this 1804 for quite a while. As long as it holds above this trend line, then we're essentially looking for gold to try to make a move up to this 1923. Now let's take a look at the Emini SP500, the ES. As you can see, there's quite a number of unfinished business above the current settlement, and also there are 3 naked point of control below the current settlement. So in the coming week, if the Emini SP500 or the S&P 500 continue to move down, then watch for these point of control here at 43.74.75, 43.45, and 43.10 to get taken out, and that would bring it down to this near the October low, near the 4,300 level. Now, if it decides to move back up, then watch these single print and also these point of control and possibly get back up above this 4,600. Then you take out this pull high here at 4,603. I'd be doubtful that it will make any higher ground and come up to this 4,700 level, essentially cleaning up these next week. But anything is possible with the FOMC meeting next week. There's definitely going to be some movement, and I'd be basically watching these on the downside and these on the upside here possibly get up to, these right here, up to this 4,600 level here. So in summary, the market is basically have corrected itself to an extent of spooking some of the market participant out. Although, it's been kind of scary last week because we're essentially seeing every day of last week, the S&P 500 was negative. The S&P 500 lost over 5% for the week. And we haven't seen that for quite a while. Remember, a lot of these pullback, it took more than a week, and then they only pull back somewhere around 5%. And for last week, for the S&P 500 to pull back just in 1 week, over 5%, that is a little bit of a shocking to a lot of the dip buyers. So again, we're basically watching these critical level, especially the S&P 500 to 4,300 level is critical to keep an eye on. We are seeing some negative internal in the Nasdaq and also in the New York Stock Exchange, especially the number of new low is being made. Now, also the other thing is, the market will sell off and reverse at the extreme. So we could be getting close to that extreme pessimism or fear in the market, okay, because we are noticing that on the up-down volume ratio, heavily negative in favor of the down volume, and also the advanced decline, as well as the number of stock making new 52-week low, the explosion of the number of stock making new 52-week low. So keep an eye on that. We could be coming close, getting near the end of this pullback. Now, if it dipped below this 10% level here, dip below 4,300 level on the S&P 500, that critical level, then we have to bear in mind the possibility that it could move itself down further. And if it break correct itself more than 15%, we could be heading toward this 20% level where it will be classified as entering a bear market. But with the New York Stock Exchange composite telling us that this could be a correction or a pullback, not necessarily entering into a new bear market. So just keep an eye on this 10% level, the 4,300 level. That's a critical level. So thank you for watching, and be sure to smash that thumbs up to help me promote and share this video. Stay safe.